Hello traders and happy Sunday to you. Welcome back to another video. Today we are taking a look at the markets for the week ahead, and I'm going to start where I usually do, which is with my current positions going into the week. I am currently still long gold from around 1980, and with the recent pop above 2000, I continue to be holding on to my trade with a trailing stop. Now, trailing stops are not for everybody, but it is how I personally manage my trades and lock in profits in the case that a market pops in my favor. So to clarify, with this recent gold move, the US dollar weakened pretty tremendously as unemployment numbers continue to sort of go in the direction that the Federal Reserve has been wanting. And as that occurs, the market is forecasting for less rate hikes and less sort of oppressive or hawkish Federal Reserve monetary policy. I know that was a lot for the purely technical traders or to the newer traders. That can sound like some really, some mumbo jumbo, if you will, for lack of a better term. But what that really means is that the Federal Reserve's campaign towards 2% inflation is going well. And so if that campaign continues to go well, it is expecting that the gold market actually could rally. Why would that be the case? Well, because again, if the dollar is expected to not be so red hot and so uncontrollably strong, it's going to give way to assets like gold to soar relative to the US dollar, but not just the gold market. We've also got things like the euro flying high here recently. We've got the pound. If you take a look at the pound has been on a nice run recently. And this all makes sort of sense when you think about it through the lens of, hey, the Federal Reserve is seeing what it wants to happen, and it's giving room for the dollar to weaken and new assets to sort of rebound a little, for lack of a better term. Last year, for those of you guys who have been watching the pound got smothered by a strong US dollar amidst all of the Federal Reserve's rate hikes and things like that. We've seen that trade sort of reverse here in 2023. And continue to see that sort of play out. So anyways, going back to gold for a second, I am still long gold. I continue to hold on to my positions, and this orange line denotes my stop loss, which has been trailed inside of our VIP signals group. Let me share with you real quick what that looks like. So if I go over to our Discord channel, I pull it on the screen here. What you can see is this is what our Discord channel looks like. Inside of the Discord, I share all of my trades. We also have Frank and Ivan, two of my trading companions, if you will. We've been trading together for a long time, and you can see this is my gold trade. So I entered around 1983, stop loss below. Market moved off of my zone here and has continued to move nicely in my favor. At this point, stops are locked in. We can't lose money on this trade. In fact, now we are seeing just how much the market wants to give us. If the market rallies this week, if gold is able to take out the previous highs, I'll look to trail stops further into profit and lock more on the move. Now, why was I bullish gold? Well, I want to start with something really important here this week. We're taking a look at the smart money tracker on the COT report data that we get from the Edge Finder. Now, if you're not familiar with the Smart Money Tracker or COT data, this is basically a report that's filed once a week. We get data each Friday, and on these Sunday videos, I try and go over the latest in terms of COT because it is very, very important to show what smart money or institutional money is buying and selling. I continue to hold gold because, again, it is a very bullish asset, not by me and my buddies. No, actually institutional money. The big money is long gold. And how do I quantify this? We'll take a look. Let's go down here and we'll highlight this part of the chart. You can see this is the long versus short contracts that we have data on pulled into the Edge Finder. And you can see 266,000 units or contracts long on the futures market. Well, the short side of the trade is much, much less daunting. You've got 70,000 here in terms of 71,000, let's call it, short contracts. Recently, the longs increased by 21,000 and the shorts also increased by about 7,400. So what does this bring us to? Well, it shows us that big money has a strong preference as of lately to be long gold. 79% ratio, 79% of contracts are long and only 21% are short. So how do we take that into account? Well, again, it gives me a bullish bias going into the week to consider more trades towards the long side of the gold market. So taking a look back at the charts, again, gold is continuing to be on my watch list. As long as we don't break 2,000, I will continue to hold. By the way, guys, the Edge Finder is a market scanning software that is available right now for a massive 40% off discount. We do this very, very rarely. This is our one year anniversary of building this software. My company, A1 Trading, we specialize in building software tools for traders. And this has been a project for us for a full year now. And to celebrate our many, many projects that we've completed on this, we are offering the product at a massive 40% off discount right now. So down below in the description, you can click a link. There is a discount code and discount information. If you click information about the Edge Finder there, you'll find it. You'll get access to the Smart Money Tracker, our retail sentiment indicator, the bank signals tab, our watch list tab, and signals for 30 plus assets and pairs. And yes, it is a one-time fee. We don't do monthlies. This is mostly because, again, I don't really like the idea of having traders have to pay subscriptions to us or anything like that. If you want the software, you want to support our project, get access now for 40% off using code YTVIP down below in the description. You'll find all the information if you'd like to get access to the software. One more thing I'll take a look, and feel free, guys, if you'd like to pause and take a look at this. Some other assets to notably mention here. JPY, still very, very short from institutional money. CAD, or the Canadian dollar, very short by institutional money. CHF, also very short. But this is interesting because this shows us that, again, these are you've got JPY and CHF, two of the risk-off currencies being heavily shorted. Very interesting to see going into a week like this. Anyways, let's also take a look real quick at retail sentiment. This is going to show us what retail traders are buying and selling right now. And you can see gold continues to be a very short asset by retail traders. 60% preference, according to client sentiment, to the short side on gold. You've also got pound USD, very short, which actually gives me some extra confirmation. Let's talk about the pound here. GBPUSD, we'll pull this one up here for a moment. So the pound has been really, really strong recently. And again, I mentioned, or I briefly alluded to sort of the idea behind why the pound would be so strong in this atmosphere. Well, I'll show you something really interesting. So why would the pound USD be so bullish despite having a list of problems themselves? They've got high levels of inflation. Their GDP growth is nowhere near as fast as some of the other countries going on. So why is this so bullish? Well, let me show you something very notable. I'm going to take a look at the inflation of both the UK and the US. One thing very notable here is you can see that the US, in terms of its inflation, has it sort of more under control than the UK. Poor UK, my heart goes out to anybody who's in the UK or any place that's really suffering with serious inflation. It is a devastating problem to have. But what you'll see is there is a pretty interesting divergence here in terms of the US inflation reading is declining, and it has been declining for several months now, since midsummer of 2022. And meanwhile, inflation in the UK continues to sort of tick up and move sideways and upward slightly. Why does this matter? Well, again, the Bank of England is going to likely have to continue to raise rates if they ever want to squash this inflation problem. Meanwhile, the Federal Reserve may have room to slow their roll, and that is in fact what we're starting to see. We're seeing the Federal Reserve slow down on rate hikes and things like that. So that creates an obvious shift between the pound and the USD. Again, it shows slight bearishness for the US dollar as rate hikes are less expected, whereas the pound is looking more attractive in some ways as this trade sort of unwinds mostly from the US. The Federal Reserve, slowing its roll, has a massive bullish factor on the pound USD, which again has been beaten down for a long time. So, to be fair, this technical chart looks very nice. You've got a pullback to this area here. And to me, it looks like it will continue to chug higher as long as this divergence continues to occur. That would be my take on the pound USD going into this week. What about the Euro USD? Well, let's just do our little chart here again in terms of inflation. I'm curious to see if we could just pull off the UK and put instead Europe. You can see that there is a much more convergence between the two. Inflation peaked in Europe where it seems, what is this? This is October 2022, a little delayed from where the US began to decline. Now, notably, look at this decrease, very rapid decrease in inflation. Overall, I would say that, the euro in some ways has a similar effect, But despite that, the euro is still benefiting from the Federal Reserve's low. It is an interesting pair to watch. I would say if you're watching this thing from a technical perspective going into this week, watch for breakouts. If you're bearish dollar, watch for breaks on the euro and both on the pound. Things could be very interesting. Speaking of the dollar, let's take a look at this. Chart still looks bearish in my view. I think we head down to 101. Personally, we'll see if I'm right about that. But again, from a technical perspective and fundamental perspective, I think the dollar has more room to squeeze down lower. So basically, as of the most recent week, price action was able to take out the lows here around 102.17. We had support here. Price broke underneath. Now is retesting this area and looking like it could be headed down to 101 just from a purely trend following perspective. This would, of course, be good for my gold trade, and it also may have some positive impact on the S&P 500, which officially is something on my watch list for buys going into this week. If we do in fact get a pullback on the S&P 500, I'm looking for an opportunity to get long. You can see my chart markup here from last week. I made a tweet about this. If you don't follow me on Twitter, feel free to do so. It's at TraderNickFX if you use Twitter. But we've been putting in higher lows and higher highs, and as we sort of put in this new high, things seem to be shifting. Right, you have the Federal Reserve seemingly getting what it wants out of the job market. We had under 10 million job listings, job availability here in the United States. As of the last week, we found this data out from our NFP event, and this was really, really telling. I mean, the Federal Reserve is getting sort of what it wants to happen, wants to see that slow and unemployment rate. Unemployment rate actually ticked up a little bit. I believe we ticked down. But the number of jobs created was much less than the previous month, at around what it was at like 230,000 jobs, something like that. That was much slower than the 300s and the 400s that we've had in previous reportings. So again, the Federal Reserve is sort of getting what it wants out of the scenario. So in my opinion, pullbacks in the S&P, hey, the Federal Reserve is probably going to get out of our way a little bit, and we might have room to the upside. My opinion, we'll see if I'm right about that. But again, I'm looking for pullbacks going into this week. Taking a look at the watch list, this is the most confluenced pairs or assets on the Edge Finder currently. You can see there's my S&P idea. Also US 30, that's the Dow Jones. Both of these look attractive going into the week, in my personal opinion. Well, I continue to be long. Oh, wait, where did our gold trade go? This is interesting. So gold actually fell off. And let me make sure that there's not an error, that we're having some maintenance be done over the weekend or something. Oh, yeah, this looks a little weird. What's going on with retail sentiment? Retail sentiment should be printing a bullish signal as we have 60% short, 40% long. Yeah, that's an error. So I apologize for that. For those of you guys who are looking at the Edge Finder over the weekend, we'll have that fixed soon. Sometimes we do our heavier maintenance over the weekend. So apologies for that, but we will have that up and running pretty soon on the Edge Finder. But yes, this should still be a bullish signal for gold. So we're getting indices and commodities both looking attractive in terms of the Edge Finder's bias. So I do like that, and I will continue to look for opportunities to buy them on pullbacks. I'm already in on that gold trade, but willing to look for an S&P 500 pullback if possible. Here's US 30 while we're at it, and you can see US 30 really looking pretty dang strong now. Look at the Dow, just broke out of this downward structure, and with some conviction has been on a tear to the upside here. This is a 4-hour chart, so you can see shot to the upside and just went sideways. Meanwhile, some of the other markets gave back a little bit more of their gains. You can see here's the NASDAQ. NASDAQ shot to the upside and sold off, but then followed through here towards the end of the week, had some strength come back into this market perfectly at support. What a beautiful trade this one would have been had you been looking at the NASDAQ. Nice upward trend. Like I said, I'm liking the indices a lot right now, and will look for opportunities to get long going into this week. So there you have it. I do like the indices long. I'll admit it. So we'll see if we can find a trade on that one going into this week. Of course, if I share it, it'll be inside of our Discord channel that I shared earlier, which was linked in the description down below. All right, let's see what else we can find here in terms of, maybe we'll do some currency pairs, see what's going on in the currency world. We've got GJ showing up as a long, GJ and also Euro Yen, both as potential longs. Beautiful break and retest here. This is a 4-hour chart. So here's GJ. Price rally, very, very strong. Again, for much of the same reasons as we could expect from the S&P 500, etc., was that we had this very strong risk on sort of move across the board. Then we pulled back into this area. And again, we mentioned that in terms of smart money tracking, we have that data to see that, okay, institutional money seems pretty piled against the JPY and CHF currencies. So again, I'm looking to be predominantly long counter currencies to them, the pound, the euro, etc. So we'll see if this one holds, but again, probably not an interest unless we do double back and retest this area. That may be where I think the value point is in terms of a technical chart perspective. Again, guys, what we do here on the channel is we don't just look at purely technical charts. I know that in terms of, if we're very honest with ourselves, 99% of us, we all start with the technical analysis side of things. We don't usually start with fundamentals. It's rare to start with, economic numbers and tracking the Federal Reserve and all that sort of stuff. We mostly start with technical analysis, which I don't think that there's anything wrong with technical analysis. I actually love using it myself to help me find entries and exits. But it is not the holy grail. I do not believe that technical analysis, let's be very, very clear about something, guys. If technical analysis had some secret magical formulas, it wouldn't be so hard to become a profitable trader. Because if it was as simple as, the price does this, and does some cool pattern, and then you buy, and it's a guaranteed win, everybody under the sun would just program algorithms to find that and trade it immediately. And as soon as that edge was discovered in the markets, if everybody knows about an edge, it's no longer an edge, right? An edge is something that you do that the market is not keen to. But do you realize how many people are looking at the charts that we are all looking at? Millions and millions and millions of people, intelligent people with lots of money, looking at these markets. So to think that there's a simple technical pattern that's going to give you the holy grail answer, in my opinion, is a little bit naive. In reality, the bigger story, the fundamentals, is where we can find a strong directional bias, and then we can actually just use the simple technicals that we all know and love to actually find entries and exits. That is at least my quote-unquote philosophy on this stuff. It has treated me very well over the years. There's nothing easy about trading. There's nothing easy about making money in the markets, but equipping yourself with a full picture from fundamentals, I believe, is a much better way to approach the markets. And again, it is why we've dedicated the last year plus building our software, which assists us in spotting trends in GDP and inflation and unemployment and interest rates. We have dedicated a tremendous amount of time, energy, money, effort, all that stuff into building this software. And again, I did mention earlier that we are doing that sale, so please do not miss it. I do not want to, we get emails every time we do these sort of sales. Hey, I missed it. Can I get it? And we have to turn people down because, again, we do a sale for a dedicated amount of time. You get access, you get access. If you don't, then you'll have to wait until, whenever we do it again, which is probably the end of the year or something like that. So don't miss it. Again, take advantage while you can. The link is down below in the description, and you can find out all you need there on our sign-up page. Now, I want to take a look at seasonality here for a second as well. Seasonality is one of my favorite indicators to pay attention to in terms of stuff like this. So if we take a look, we could go to the euro, and we're looking at the euro's seasonality, right? And the seasonality of the euro here is showing us month by month what historically things tend to do. So if we take a look at what is we're in April, and April we see a slight decline historically for the EURUSD. So that might be a little bit of a hesitant, and so we actually hold back on trying to go super long on the euro during the month of April. Now, that is just one contributing factor. It's not the only thing we pay attention to, but seasonality is something that we look at. Now, what I want to clarify in terms of people who are interested in getting our software, this software, that not one of these is a holy grail, right? Nothing in trading, at least that I've come across, is a holy grail. But the closest thing I found is the confluence of very powerful indicators stacked on one another. So if seasonality is giving you one clue, and the bank signals tab gives you another, and retail sentiment gives you another, and smart money tracker gives you another, and then you take a look at the economic numbers, and they give you clues. You tie them all together, and that's where we sort of get the watch list, which helps to generate a more full picture of an asset, at least according to the metrics that we look at, to give us a buy or sell rating. Now, again, I've harped on gold recently. Last couple weeks has been my primary interest in terms of trades. I continue to watch closely on the gold market. and see if I can get this run up. I do think the red zone here that we have, 2070, is a big one, right? So I think that is, of course, our previous all-time high, right around 2074. I think we have a good, solid chance of wanting to come back and retest those highs. Can we take them out? We'll have to see. But again, I think that there is the catalyst there. I think that the Federal Reserve finally letting off the gas a little bit on raising rates and that sort of thing could give us the steam that we need to get up to the previous highs in gold. I'll continue to track it. If you guys are not inside the Discord, come join us, come get in on the action so you can trade alongside myself and my trading companions, Frank, Ivan, and the rest of our gang at A1 Trading. So thank you guys for watching. If you made it to the very end of the video, do me a quick favor, comment down below that you made it to the very end. If you made it 20 minutes into a video with me, I really do appreciate it. And I want to just say, you know, I genuinely love being able to do this every week and sharing my ideas with you guys in markets. Before I did all this stuff, I was a software engineer. Of course, makes sense, right? Because now we're in the software. You know, the business side is all building software and stuff like that. It is right up, you know, sort of my historical past alley. But if you made it to the end of this video, I do genuinely want to say thank you for supporting us. When I say us, there are multiple people who put in a lot of work into these videos and things like that. So if you did make it to the end and you enjoy this content, just let us know. Comment down below. It really makes our whole day. So thank you guys. Have a great rest of your weekend. Happy Easter for those of you who celebrate it, and we'll see you back next time.